Stop everything you're doing right now. This is not just another market update. This is a seismic shift that will redefine the silver market forever. It is Monday, January 19th, 2026, and while most investors are still focused on the usual headlines, a new force has just entered the arena. A force so powerful it dwarfs every other player combined. The United States government has officially announced a $5 billion silver buy program, a move that will send shockwaves through the global silver market. This is no ordinary buyer. This is the new whale mice, a buyer with a bottomless wallet and a strategic mandate that makes hedge funds, retail investors, and even industrial giants look like small fish in a pond. Unlike speculative traders who chase price, this whale buys because it must for national security, for critical infrastructure, and for the survival of the green energy transition. The scale of this buy program is unprecedented. It signals a fundamental shift from silver as a speculative asset to silver as a strategic imperative. If you think the silver rally is over, think again. The tsunami is just beginning, and those who ignore this warning risk being left behind as the price rockets higher. To understand why the $5 billion government buy program is such a game changer, we first need to look at the current state of the silver market. Silver is no longer just a precious metal for investors or a commodity for industrial use. It is at the center of a perfect storm of supply shortages and surging demand. On the supply side, silver production has been struggling to keep pace with growing needs. Mining output has plateaued in recent years due to declining ore grades, labor strikes, and geopolitical disruptions in key producing countries like Mexico and Peru. These challenges have created a bottleneck in the physical supply chain, making it increasingly difficult to source silver at scale. Meanwhile, existing inventories, especially those registered for delivery on futures exchanges like COMEX, have been steadily shrinking. This registered inventory is the only silver that can be used to settle futures contracts, and its depletion signals a tightening market that's running on fumes. Demand for silver is exploding on multiple fronts. Industrial demand, particularly from the rapidly growing solar energy sector, has surged as silver is a critical component in photovoltaic cells. Electric vehicles, 5G technology, and medical applications are also driving up consumption. Unlike gold, which is primarily an investment and store of value, silver AS' dual role as both an industrial metal and a monetary asset makes its demand uniquely inelastic. Industries cannot simply pause their silver usage when prices rise. Price trends reflect this tension. After years of stagnation, silver prices have recently broken out of their long-term range, climbing from the mid-20s to the 90-plus level in just a few months. However, this price rally has been volatile, with sharp swings caused by paper market manipulation, arbitrage between physical and futures prices, and regulatory interventions. Despite these fluctuations, the underlying fundamentals point to a sustained bull market driven by real physical shortages and strategic buying. In this environment, the entry of a $5 billion government buyer is not just significant. It's a catalyst that could accelerate the market, transformation in ways few investors are prepared for. The announcement of the $5 billion silver buy program marks a historic moment because it signals the United States government stepping into the silver market as a dominant strategic buyer, a role it has largely avoided for decades. Traditionally, the government AQS involvement in precious metals was limited to managing gold reserves or selling off silver stockpiles accumulated during the 20th century. But today, the stakes are dramatically different. At the heart of this buy program is the Strategic National Stockpile, a government initiative designed to secure critical minerals and materials essential for national security, defense, and key industries. Silver is at the top of this list because of its indispensable role in military technology, satellite systems, and the rapidly expanding green energy sector. Unlike hedge funds or retail investors, the government's mandate is not to profit from price fluctuations, but to ensure a reliable supply of silver for the country's strategic needs. This buy program is unprecedented in both scale and intent. $5 billion in physical silver represents a massive portion of the available market, dwarfing the typical purchases made by hedge funds or retail buyers. Hedge funds, while large and influential, operate within strict risk parameters and budget constraints. They buy and sell based on price signals, market sentiment, and short-term profit opportunities. Retail investors, on the other hand, are often price-sensitive and limited by smaller capital pools, making their impact on the market more fragmented and less predictable. The government, however, is a buyer of necessity. Price is secondary to securing supply. This means they will buy at any price, absorbing vast quantities of silver regardless of market conditions. The shift from speculative to strategic buying fundamentally changes the market dynamics. It creates a new whale whose actions can overwhelm traditional market forces, squeeze short sellers, drive prices sharply higher. Moreover, the government's involvement brings a level of certainty and permanence that speculative buyers cannot match. While hedge funds may exit positions quickly and retail investors may hesitate during volatility, the government's mandate ensures sustained, relentless demand. This makes the $5 billion buy program not just a headline, it's a market-moving event that signals a new era for silver. To truly grasp the magnitude of the $5 billion silver buy program, we need to translate that dollar figure into physical silver, the actual ounces that will be removed from the market. At current prices hovering around $90 per ounce, $5 billion equates to roughly 55.5 million ounces of silver. That's a staggering amount of physical metal entering the hands of a single buyer. Now, let's put that number into perspective. The global annual silver production is approximately 800 million ounces. This means the government buy program alone represents nearly 7% of the entire world's yearly silver output. For a single buyer to absorb that much silver in a relatively short time frame is unprecedented and will place enormous strain on the already tight supply chain. But the impact goes beyond just annual production. The silver market also relies heavily on existing inventories, the stockpiles held in vaults around the world, including those registered for delivery on futures exchanges like COMEX. These registered inventories are critical because they represent the silver that can be immediately delivered to fulfill contracts. Currently, registered inventories are estimated to be around 120 million ounces, a figure that has been steadily declining as demand outpaces supply. The government's purchase of 55.5 million ounces would consume nearly half of these registered inventories. This rapid depletion will exacerbate the physical shortage, leaving fewer ounces available for industrial users, investors, and speculators. It also increases the risk of delivery failures and forces market participants to compete aggressively for the remaining supply. In addition, this buy program will likely trigger a ripple effect across the market. As inventories shrink and physical silver becomes scarcer, premiums on physical silver products, coins, bars, and rounds will rise sharply. This will further widen the gap between the paper price of silver and the real-world cost of acquiring physical metal. In summary, the $5 billion buy program is not just a large purchase. It is a market-altering event that will consume a significant portion of the world's silver supply, tighten inventories to critical lows, and set the stage for a dramatic price surge. Investors who understand this scale will recognize why this new whale is poised to dominate the silver market for months, if not years, to come. The entry of the U.S. government as a massive buyer fundamentally disrupts the delicate balance of the silver futures market, registered inventories, and price discovery mechanisms. To understand this, we need to look at how these components interact and how government buying shifts the entire landscape. Futures markets like COMEX rely heavily on registered inventories, the physical silver that is fully allocated and available for delivery against futures contracts. When the government aggressively purchases physical silver, it drains these registered inventories at an accelerated pace. This depletion reduces the supply available to satisfy delivery demands, creating a physical shortage that the paper market struggles to reflect accurately. This shortage puts enormous pressure on price discovery, the process by which futures prices are supposed to reflect the true market value of silver. However, when physical silver becomes scarce, the futures price can become disconnected from the real-world cost of acquiring metal. This disconnect is often seen as a widening spread between paper silver prices and physical premiums. The government's relentless buying exacerbates this gap, as the paper market tries to maintain artificially suppressed prices while physical silver commands soaring premiums. The impact on short sellers traders who bet on silver prices falling is severe. With the government absorbing vast quantities of physical silver, shorts face a shrinking pool of metal to borrow and deliver. This scarcity forces many shorts to cover their positions at higher prices, fueling a short squeeze that drives prices even higher. The government's buy program effectively acts as a powerful counterparty that can overwhelm traditional short sellers, making it nearly impossible for them to maintain their positions. Arbitrageurs, who profit from price differences between markets, also face challenges. The growing divergence between physical and paper prices creates arbitrage opportunities, but the government's buying and shrinking inventories limit the metal available to move between markets. This disrupts the usual flow of silver from one region or a market to another, intensifying supply constraints and volatility. Finally, the government's role highlights the fundamental tension between physical silver and paper silver. Paper silver futures contracts, ETFs, and derivatives can be created in large volumes without corresponding physical backing. Physical silver, however, is finite and must be sourced, stored, and delivered. The government's buy program shifts the market's focus back to the physical metal, exposing the fragility of the paper market and signaling a potential decoupling where physical silver prices soar independently of paper prices. In short, government buying is not just a large purchase, it is a market shock that strains inventories, disrupts price discovery pressures, shorts and widens the divide between physical and paper silver, setting the stage for a volatile and historic bull market. Silver is unique among precious metals because it serves a dual role. It is both a valuable investment asset and a critical industrial metal. This duality makes silver demand particularly robust and, importantly, inelastic, meaning that industries cannot easily reduce their silver consumption even when prices rise. One of the largest drivers of industrial silver demand is the solar energy sector. Silver is a key component in photovoltaic PV cells, where it acts as an excellent conductor to capture and convert sunlight into electricity. As the world races toward renewable energy and decarbonization, solar panel production has skyrocketed, consuming hundreds of millions of ounces of silver annually. This demand is expected to grow further as governments and corporations commit to ambitious green energy targets. Beyond solar, silver is indispensable in electronics. It is used in everything from smartphones and 5G infrastructure to medical devices and high-performance batteries. Its superior conductivity and antimicrobial properties make it irreplaceable in many cutting-edge technologies. The rapid expansion of electric vehicles, EVs, also adds to silver's industrial demand, as silver is used in electrical contacts and sensors, critical to EV performance. In the defense sector, silver plays a vital role in military technology, including satellite systems, radar, and missile guidance. This strategic importance is why governments, particularly the US, prioritize stockpiling silver to ensure national security and technological superiority. Because these industrial uses are essential and cannot be paused or substituted easily, silver demand remains inelastic. Manufacturers must secure silver regardless of price, which creates a floor under the market and intensifies competition for limited supply. On the supply side, silver mining faces significant challenges. Declining ore grades, geopolitical risks, and labor disruptions have constrained production growth. Meanwhile, recycling rates are insufficient to fill the gap. This combination of rising industrial demand and constrained supply creates a structural shortage that strategic stockpiling aims to mitigate. In this context, the government's $5 billion buy program is not just about investment. It is a critical move to secure silver for industries and defense, ensuring the country's technological and economic resilience in an increasingly uncertain world. The U.S. government is about to unleash a tidal wave on the silver market with a massive $5 billion buy program, and it's going to change everything. This isn't just another market ripple. It's a fundamental reshaping of supply and demand that could send silver prices into the stratosphere. To really grasp what's happening, we need to look at a crucial metric, the gold to silver ratio. Right now, gold is trading around $4,700 an ounce, while silver is at $90. That puts the gold to silver ratio at about 52 to 1. It takes 52 ounces of silver to buy 1 ounce of gold. Historically, for thousands of years, this ratio has averaged between 15 to 1 and 30 to 1. A ratio above 50 is a massive red flag, screaming that silver is incredibly undervalued compared to gold. If this ratio even starts to move back towards its historical average, say 25 to 1, silver prices would have to explode, potentially hitting $200 or even $250 per ounce. That's a doubling or tripling from where we are today. Technical charts are flashing green, supporting this explosive outlook. Silver has recently smashed through key resistance levels, and it's doing so with strong volume and momentum. The moving averages are lining up in a classic bullish formation, and other indicators show buying pressure is building fast. We are also seeing a huge gap widening between the price for physical silver in your hand and the paper price you see on a screen. This kind of stress in the market is often the final signal before a massive price surge. The government's buy program is the catalyst, lighting the fuse, sucking enormous quantities of physical silver off the market, and forcing everyone else to fight for what S left at much higher prices. With industrial demand not slowing down and supply already tight, all signs point to one thing: a major silver rally is coming. Keep a close eye on that gold to silver ratio. It's your roadmap to what could be staggering price targets. Ignoring this seismic shift is a risk you can't afford to take. This government program is a fundamental transformation that will redefine silver's value for years. Those who stand on the sidelines waiting for a better price might find themselves completely locked out of the market, staring at empty dealer shelves or paying sky-high premiums. The paper price on your trading app is quickly becoming irrelevant as the physical market asserts its dominance. Positioning yourself before this buying frenzy truly takes hold is critical. Early movers will capture the initial price surge, avoiding the panic and FOMO that will inevitably grip the market when the full scale of this government intervention becomes clear. Owning physical silver means protecting yourself against the coming disconnect between paper contracts and real, tangible metal. The fear of missing out is justified this time. We are witnessing a once-in-a-generation opportunity as silver becomes a strategic asset for nations and industries. Don't be the one left watching as this new whale in the market, the US government, reshapes everything and leaves latecomers fighting for scraps. Let's break it down one last time. The US government's unprecedented $5 billion silver buy program is a complete game changer. It's draining physical inventories, creating a supply shock, and setting the stage for a massive price explosion. The gold to silver ratio proves silver is deeply undervalued, and the technical charts are screaming buy. Industrial demand isn't going anywhere, and the government's strategic stockpiling means relentless buying no matter the price. The window to act is closing fast. Waiting for a dip is a dangerous game when physical silver is vanishing and premiums are already on the rise. The paper market is no longer a reliable guide to real-world value. Position yourself now to avoid being left behind. This isn't just an investment, it's a race for survival in a world where silver is becoming a lifeline. Don't just watch the tsunami from the shore, get on board before the wave hits. Thanks for watching, and be sure to subscribe for more updates as this story unfolds.